From CRI Simple Numbers, this is Profitability Playbook, the Simple Numbers Podcast, a podcast for those championing market growth and anchoring the nation's economy, small businesses, and entrepreneurs.
Hey there. Welcome to a following a holiday edition of the Simple Numbers Profitability Playbook Podcast. Did I say that right? Yeah, right. Yeah, there we go. Man, P3, P cubed. I'm still going to put that in for requests. We just get it called P cubed. You have a good long weekend?
You know, it was a little bit rainy, but, the weather broke on yesterday. And so I shoveled rocks for flower beds pretty much all day. Makes you appreciate the day job.
Some next level dad stuff right there, man.
Oh, yeah, definitely.
Very good. Very good.
That's your...
Yeah, I mean, just with the kids doing stuff, just parenting stuff. I did start off with a trainer. I've always worked out and done stuff. That's what I was trying to call you about this weekend. Always have done stuff, and when I get into it more, I'm going to share the guy's name and everything for people on here into that. I've always been a workout person who'd done it, but this dude, I wanted something to take me to the next level, and already it's awful, which means it's good. Yeah. So I've been doing a lot of meal prepping and stuff like that this weekend for myself. So that's been a job in and of itself. So, well, cool. Everybody, we are going to be all over the place today in typical Mike and Brandon fashion. I think sometimes our topics are reflections of our brains unable to focus on one thing for a long period of time. But we're going to be talking about some marketing, some core customer stuff, and give a quick economic update here on everything that's going on, because we get a lot of questions and things like that. But Brandon, what say you, man? What's the market look like?
Well, so looking at our 100 company model, this is going to be data through March. Don't have April wrapped up for everyone just yet, but I don't think there's going to be a lot of changes based on our phone calls of how April's been going. So few high points of what's taking place. Of course, our community model members get access to the full version of this. So, all the more reason to be a Simple Numbers client as we go into much more detail. But we do want to make sure everybody stays up to speed on what's going on. I've been telling a lot of folks on calls lately, it's deja vu, man. Exact same things from this time last year that we're hearing again. And I think we were all hopeful that once we had, January, February, when things were kind of trucking, that we weren't going to have to return to similar conversations. But here we find ourselves yet again. Sluggishness, people pushing on projects, deal flow is slow, close rates are going down a little bit. People are pushing and increasing the days to close. It's tough out there, and now we're in the officially in the summer slowdown, to where everybody's out of town and they're on vacation and they're out of the office, and you can't get any traction. So that's very, very high level context. A few things to go with that. So 100 company model, top line's growing by about 8%. That has been fairly consistent. You can go back across time and look back, and this time last year, guess what we were growing at? 8%. It just has not changed in 12 months. Been very steady. Keep in mind, we've talked many times before, inflation is likely somewhere in that 7% range. And so just keeping our nose above water when it comes to enough momentum. We still have a very segregated marketplace in terms of those that are seeing some success. So we call it the upstairs and downstairs economy. That's backed up as it was this time last year. So you're either probably growing by 10, 15, 20%, or you're even, maybe even declining. And so that's why when you put everybody together and look at it, it's an 8%. I like you might have clients that are growing by 8%, but most all of mine are either going double digits or not growing at all.
Yeah. There's only a few that are middle of the road. And it just seems like, to me, there's a lot that are just on the brink a little bit. Like we're really fighting to keep that profitability, or what's even worse, what I can't stand is no consistency.
Yep.
And so good quarter, horrible quarter, good month, really bad month. Like to the point of going, what just happened? I mean, how does that happen right there when we had several straight good months and then it just fell off? So yeah, I think that probably drives me crazy as someone who looks at the data and you're always trying to dial things in, or just when you think the client has stuff dialed in, like, hey, where'd the sales go the last 2 months? They were just fine. And so that's been a little bit of a pain point.
Yeah. Margin percentage, very steady, no changes there. One thing the model has started to show, I wouldn't say totally surprising, but it's the first time we have seen it in a very long time. Direct labor efficiency is declining. And I kind of ran some numbers on this one just to give you an idea. It's about a $7 million shift if we were at the same level of direct LER as we were a year or so ago. So imagine spending $7 million more on labor with no additional margin to show for it.
So what I think there's some of this in there, and you probably agree with it. So the market in lots of sectors is pushing back on price increases.
Mm-hmm. Definitely.
The problem is with the massive inflation still in there, still embedded, no one wants to work for less. And so people are still wanting their raises. You're still, some salaries are much higher than you probably think they were in different areas. And so while you're adding that labor, hey, I really need that person. Oh my gosh, I'm paying what for them? And they're matching what the market is showing that they need to live, or what their worth is. And the problem is it's very tough to push that top line on the price increase side.
Right.
In a lot of industries, not all of them, but in a lot of them.
Seeing it in two buckets. So just as you mentioned, the folks who are moving margin dollars up and they're adding to team, yes, that team is continuing to get more expensive. The second bunch, though, are folks that are in a flat to declining margin environment. And most of them have reduced their overall labor. However, they've gotten to the point to where they're at a skeleton crew.
Mm-hmm.
You got to have one person running your cash register. You got to have somebody on the floor. You got to have somebody making what, they are running just bare minimum teams, but margin dollars keep coming down. And so it's like, there's not really a good option. Now, one thing that I would say was a trend in 24 that we're seeing repeated in 25 has been flexible labor. Many, especially if you're project driven, I'm seeing folks get very skeleton with their committed labor spend and then using contractors, freelancers, temp labor, all of those kind of things to supplement. And likely we'll continue to see that.
Foreign labor.
Yeah. So that one's up. That's a mover. That's a mover on the overhead side of the house. As you can imagine, seeing total operating expenses continue to increase. I don't think that's news or surprise to anyone there. Management labor is actually hanging in there. It's not at its peak, but it's holding its own. It's staying relatively flat as far as that goes. And then profit. So in terms of profitability, here's one little trend we're seeing. Profit hit a peak in December of 24, rolling 12. Now, in December of 24, if I told everyone, hey, this is the peak, it's going to come down from there, we would have all just been sick. Because we thought, it's probably not going to shift. But keep in mind, we had that little bit of a bump at the end of last year. So that gave us a little bit of momentum. And it actually increased. You look at from really October of last year to December of last year, we saw an uptick. And now each month has been a steady decline since December on the R12. So all that to say, I wish I had better news, but we're not seeing anything in the near term that's going to change this situation. You got tariffs continuing to get delayed. We're in the end of May 2025 here, and just had a delay in the full tariffs on imports from China. We've got a delay on imports from the EU. Hadn't been resolved. It's been delayed. So we got to get that resolved in some form or fashion so the market knows what the rules are going to look like. And then the other thing, we had quite a bit of conversation about this last week with folks. We've been talking about interest rate declines with the recent downgrade of U.S. debt and these pullback from foreign governments purchasing U.S. debt, it's not looking like rates are going to come down in June. So that was the one wild card we were throwing out there, hoping that would, maybe give us a little bit of a nudge. And now, it looks to be fading. So, wish I had better news, like I said, but it's tough. It's likely going to continue to be tough. So if you're on the fence about making changes, you probably need to move forward. Don't see any sunshine in the future in the forecast. The other thing, and we'll talk a little bit about this when we get into marketing, is with leads stalling and lead flow being down and days to close coming up, I have to change the math in my cookbook. I got to have more leads. So we'll talk about that. But, get the same output. I got to have more input right now when it comes to the sales side of the house. So nonetheless.
I do want to say this just to end on a little bit of a positive note.
Please.
Is, of in that 100 company model, I believe there's actually 101 companies in there, right? 72% of them are growing revenue-wise. And they have year over year, it's a slight profit increase. Profit dollars are up. Maybe the percentage is the same, but the dollars are up. And so there's still an economy out there that's moving. No there's still people out there that want to spend money. The thing is like we've said before, Greg Crabtree said it, a street fight economy. You're going to have to go fight for it, take it, innovate, think of new stuff, be on the front side of a lot of things. That's going to help you there. So there's still a lot of movement.
Opportunity.
Right? It's not all bad. Yeah.
Quit wishing for it to get better. Instead, quit wishing for it to get easier. Instead, start working for you to get better.
Yes.
Key to life right there, isn't it?
Heck yeah, man.
All right. Let's shift gears. Let's talk marketing a little bit.
Oh, good. Because we almost got on life coaching. So
yeah, we don't want to avoid that.
You don't want me doing that.
All right. We get this. This has been a popular question and topic for some time now. Here's what I've observed, Mike. Feel free to to kind of pitch in as you're seeing some things. And guerrilla marketing seems to be the trend. Seeing folks kind of get back to maybe some of their earlier roots whenever it comes to marketing campaigns. I heard something, and I've actually seen this happen too, personally. Last week on a call, they said, we're canvassing neighborhoods now. We're doing work in the neighborhood. We're going to each door and just knocking on it.
Yep. Dude, I bet you I could count in the last month where people are like, just been sending mail out, flyers. Like, I'm talking old school, baby. Like, print that stuff and send it out. Like, get it in there. It's a digital hangover, man. Like, I'm sorry, but on any given day, there's 10,000 emails, 4 million texts. You're just so stimulated digitally that sometimes you're like, oh, look, like one of those things came in the mail the other day where they have a bunch of coupons in there. And dude, they had a bunch of Marco's pizza coupons in there. I never looked at it. But mail actually came into my mailbox and I'm like, oh my gosh, Marco's pizza coupons. I grabbed them up. And it's just that it's so overwhelmed digitally. And I'll tell you what, check this out, everybody. I pulled this ROI from paid ads. It's from our man Micah here. I always bring him up on the podcast. He's a buddy of mine, but he loves looking stuff up. It's one of the best things. Those stockbrokers are good at research. ROI from paid ads by monthly spend. 0 to 100K you're spending, 41.6% ROI. You get up to 250 to 500K, and it's down to 30.8% ROI on paid ads. And so now, again, when you look at a percentage standpoint, there's that, but you also look at profit standpoint, that can be totally different. So just want to keep that out there. But that's some data that's out there that, not that I want you to stop doing paid ads, but I think the data will point that, hey, maybe you should try looking at something different and diversifying some of those marketing tactics.
I've been hearing of a lot of folks getting on the phone, which sounds like a crazy concept, touching base with existing and current customers and clients, checking in, referral sources, same thing, you know.
Oh, yeah.
A lot of the face to face is it's trending right now, you know. Uh, whether that's doing shows or partnering with people. So, you know, if you've got a product or a service that's complementary to theirs and doing something together, I've got some clients taking advantage of retail settings when they're in the service industry. Um, you know, gripping and grinning, like we said earlier, with the face to face, being present in the community. I mean, you know, it's basically go hire the marketing consultant that was doing really good in 1997. That's all I have a few tricks for you. You know,
Yeah.
but seeing, I just really seeing a lot of that taking place, and so far from what I'm hearing, it's generating some results. So,
Yeah.
you know, something to look at and consider without a doubt. Of course, the tried and true things around entertainment, networking, all those kind of things, still very prevalent and very much needed. So, yeah.
Oh, hey, by the way, that ad was that I was talking about with the ROIs from NP Digital. There's another one here that's good too. Time spent per day on different content types. Brandon, right now, and if hopefully I didn't say this to you and you just guessed it, but right now, time spent per day on different content types from NP Digital also. Where do you think the majority of time is spent now? And I'll give you 3 to choose from: articles, videos, or podcasts.
Podcasts, videos, and articles.
It's actually videos at 154 minutes a day, podcast at 53 minutes, and articles at 16 minutes per day. So those short form videos, these TikTok sort of marketing, this quick little hits of, hey, I ain't got much time. If anyone notices, like when you go on LinkedIn now, I mean, come on, you all know me. I'm on LinkedIn. I'm a big deal on LinkedIn. So follow me, like Maxim. But the if you go on there now, they're putting all these little videos. I never asked for them. I'm like scrolling, I'm seeing all these videos of people that I don't follow. What is it doing?
The algorithm prefers them.
Yep, and it wants to keep you on the platform longer. And so a lot of people out there too are winning with these day in the life, short form videos. You know, we know a guy, everyone knows this guy, Dan Martell. He was ahead of his time because he's been doing this way longer than anyone. Like he was the first guy ever to like driving down the road in his car, like popping up his cell phone, like, hey, let me tell you about this. And people dig that. It's a minute and a half of some awesome knowledge dropping. And people get into that, and it's quick. They can do it while they're walking, driving, and don't have to take up too much time. So some things to think about there in terms of diversifying that marketing.
Definitely. All right, you ready to take another curve?
Oh yeah, where are we going?
Core customer.
Oh, it's a big one.
Yeah, so there is a temptation whenever business gets tighter that you start to expand beyond what you do best and who you do that best for.
Yes.
And start to lose a little bit of sight of who your core customer is. And so that all things to all people usually does not work out very well. So when was the last time you ran through an exercise to pinpoint, determine who your core customer is? And along with that, this isn't in any of the, you know, you can go to Chat GPT and they'll give you every exercise till Sunday on how to determine your core customer. But with that, I want you to include what is, if I can track it, and we highly encourage you to track this, what is my profit or at least contribution margin and gross margin per customer, and what's my labor efficiency per customer? Now, if you're in a retail setting, sure, you're not going to be able to track that. But I mean, if you're in professional services, many times if you're in commercial services, you can look at it by the project or what have you, and start to look and determine what type of work, what type of customers are we the most profitable on, and what do we generate the most dollars with?
And believe it or not, that can all shift depending on the economy, depending on things. And so I'll give you an example. Work with this guy. If you ever want his name, because he makes great vault doors and gun safes. Great business, great business owner, great guy. And but he he was in this marketing consult, and they had talked to him, and look, a couple years ago, he could sell at his price because he does quality work. It's custom work. He could sell at that price to a lot of lower to middle class sort of buyer. Well, the economics have shifted, and he's finding that the sales, the meat of what he does that he's currently making is now being bought by a higher demographic, that upper middle class to what you might consider wealthy for what they want, for what they're looking for. And so he was never pushing his marketing to target that customer. So what was happening is his marketing was drawing in a lot of those customers where he was, what do we hear? Getting the no's, longer time to close, lots of questions, lots of things. And so he has to do one of two things. One, he can obviously tailor then the marketing to hit the segment that's buying for him now. Or two, he has to come up with another option that meets that customer at that level of price that they're looking for. And so he was challenged, and we got on this topic was, hey, is the core customer I need to sell to right now in this environment, that one, until I'm able to come up with another solution for that other market if I want to hit it. And so he thought about it because he was just trying to be everything to everyone and thought it was always going to stay that way. Always going to stay that way. And unless he offered a different option, it's like, hey, I got to target the ones that are buying. And so it's good to do that exercise depending on your industry. I mean, I don't think there's a good rule of thumb, but if you did it at your annual planning every year, hey, what is our core customer? What we looked at last year?
Great example. And, like we said earlier, in terms of things shifting and changing, he's not the only one who's experiencing that. You got a little bit of a different audience right now in some cases than you had earlier. And yeah, you got to appeal to them differently. So,
and that doesn't mean everyone who's listening that you want to shut maybe a lower income level buyer out. That just might give you the opportunity that, hey, maybe I can create something different that does appeal to them, and sell more product or service to that group in a different way that meets them where they're at. So there might be opportunity on both sides of it. Depending, there might be an opportunity for a premium option at your company that you're doing, just like that there might be one that's a more base level version. Even Brandon and I, when we were, creating our community model, it was very important to us that we tried to meet customers where they were at. So we wanted options that, like, hey, if a company calls us, because we get a lot of companies that call us and, hey, they're not in the best of spots, but we want to work with them. We want to help them. But we also had to create something that met them where they're at. And we have to create other offerings that meet people where they're at. So there is a lot of that you can take advantage of. And I'll give you, Brandon, I'm just going to read this real quickly. Here's some questions you can answer. Who is your favorite customer, right? Like me and Brandon, I bet you if we sat here, if you said, hey, name our top 5, they'd probably be pretty aligned. They probably would be who they are. Who's your newest customer? Who's your best fit? Who's your most profitable? Who is your biggest revenue? And I guarantee you that begins to sort of shift I get where you're going with these questions. And then all of a sudden it's going to start coming to light. Why are they that way? Well, they're responsive, or they get us the data we need, or all that stuff, right? You're going to start finding that being the case. And so, those things are extremely valuable. And like Brandon said, either you can get one anywhere. We have one. You can always reach out to me. Chat quickly, throw in Chat GPT core customer exercise. I'm sure it'll pop up a million that you can do. But I guarantee you, if you start asking those questions, those 5 questions right there, favorite, newest, best fit, most profitable, biggest revenue, you're going to start really seeing who we should align with.
Good stuff. Hey, we covered some territory today. 100 company.
We did. How long have we been on this thing for? How long have we been on here?
25 minutes, maybe.
Oh my gosh. Oh yeah, we have. Oh, that went fast, man.
It did. It did.
Hey, we got a guest. We got a guest next week.
Yes, we do. And if you got topics or ideas, things you want us to discuss, let us know. And please share the podcast. Let other folks know about it. Share it with your your friends and your colleagues and fellow entrepreneurs, because we want to see this thing continue to grow.
Yeah. So Steve, come back, join us next week. I don't know when this will be put out, but we will have Kyle Ewing of TerraSlate on there. So if you want to get ready for that one, look him up. It's going to be a good one. The guy's got some awesome things going on. So take care, everyone. Thanks for joining us. We'll see you in a week.
See y'all.
If you want to know more about driving sustainable profitability for your business or are interested in learning more about CRI Simple Numbers, please visit our website at simplenumberscri.com. Thanks for listening to this episode of Profitability Playbook, the Simple Numbers Podcast. You can subscribe to Profitability Playbook on Spotify, Apple Podcasts, or wherever you prefer to listen to podcasts. If you like what you heard today, please leave us a review. This podcast is brought to you by CRI Simple Numbers LLC, a division of CRI Capital Group LLC, and a subsidiary of CRI Advisors LLC. CRI is the trusted brand under which Carr, Riggs & Ingram LLC, the CPA firm, and CRI Advisors LLC, along with its subsidiaries, deliver professional services. Please note, Carr, Riggs & Ingram LLC is a licensed independent CPA firm offering attest services, whereas CRI Advisors LLC and its subsidiaries specialize in providing tax and business consulting services. These entities operate within an alternative practice structure as defined by the AICPA Code of Professional Conduct and comply fully with applicable laws, regulations, and professional standards. Ready to simplify your business finances and drive growth? Explore valuable resources, books, and tools designed for entrepreneurs and small businesses at simplenumberscri.com.